All right, now we're back with you, and the markets are open just in case you missed it earlier today. We did have the USDA crop progress and condition numbers that came out yesterday. I want to recap what the national numbers were for you. On the corn, we had the good to excellent rating coming in at 56% this past week. That was down 2 percentage points from the previous week. Soybeans were down 1 point at 58%. And grain sorghum had a big loss. It went down 6 points nationwide at 45%. And within that, on the I-80 corridor, we had Nebraska and Iowa taking a beating on their ratings. Both of them went down 6 points on the corn and on the soybean rating yesterday. Also, this morning we had an overnight export sale to talk about. And we had two, actually. It was related to soybeans and soybean meal. We sold 264,100 tons of soybeans to unknown destinations, and we sold 150,000 tons of soybean meal to unknown destinations as well. Does it help the cause of the markets or not? Let's take a look at the corn market with our quotes provided by Bar Chart. Well, it's not helping much on the corn yet. We were weaker overnight. Came back to almost unchanged, and now we have December corn a penny and 3/4 lower at 4.94.5. On soybeans, we had double-digit losses overnight. Then we got that export sales news a little bit ago, and it didn't really seem to help any. We have November beans down 10, and now down 9 3/4 at 13.96 per bushel there. So a little bit of weakness continuing there. Now let's check out our wheat trade. We'll start in Chicago. We'll go to the December contract. We're 9 1/4 weaker at 607 3/4 this morning. On Kansas City's market, you have December down 12 at 737 3/4. That would be about 4 cents from our low of the day. We're off of our overnight high by 11 or 12 cents. And in spring wheat this morning, December is down 3/4 at 790 3/4. So kind of a weaker start just about everywhere you look this morning. I want to bring in Brian Hoops, the president of Midwest Market Solutions. He joins us now from Springfield, Missouri. Hey, Brian, thanks for stepping in here and joining us this morning. I appreciate that. You know, we had a lot of weakness in the trade overnight, and it seems to be totally ignoring the drop in the condition ratings and the new overnight export sales data. What's the trade reacting to this morning?
Yeah, you know, it really feels like a turnaround Tuesday type of environment today. The crop progress numbers that came out yesterday were not as big of a drop as what the trade had anticipated. They were looking, 5 to 6% drop in soybean conditions and just 4 to 5% in corn. I think it was down like 1 in corn and 2 in soybeans. So just very little movement there as far as those numbers go. And it was kind of a surprise to the trade. We saw lower prices overnight. The export sale is, I think certainly longer term beneficial. As we've discussed, these export numbers can always be canceled. These are for October through, January, February shipments. So if things really change around, these can always be canceled and repurchased at lower prices. But, it does tighten our balance sheets a little bit as far as ending stocks go. So longer term, it's supportive, but just the fact that we're trading a little bit lower here, it feels like the market has, priced a lot of the export news in already. There was rumors that China was buying beans yesterday, and so I think it was traded yesterday. We're reacting to just the fact that maybe we're overextended here to a small extent. We've closed higher in soybeans 8 out of the last 9 sessions, and there's certainly, I think, buying interest in this market at these lower prices that we could close higher by the end of the day. I can't rule that out, but it just feels like this market maybe is starting to feel a turnaround Tuesday type trade coming.
What about the fact that we have first notice day on September contracts coming up day after tomorrow, I believe, right?
Yeah, you're exactly right. So first notice day is the 31st, which is Thursday, I believe. So Wednesday's close is when you could be delivered on. So that usually produces a little weakness going into it. And then we see some strength coming out of that usually. So we're also going to a 3-day weekend with Labor Day coming up. And I don't know that a lot of the trade wants to be short going into Labor Day. So I wouldn't be surprised to see, some strength at least by sometime on Wednesday noon as we go into the close. Prices start to gain some strength and then start to rally Thursday into Friday ahead of the weekend.
Okay, excellent points. We'll come back and open up our livestock trade here in just a moment with a little help from Brian Hoops. All right, now let's take a look at our livestock trade with a little help from the quotes at Bar Chart and Brian Hoops. Okay, here we go. On the big board, let's go to the live cattle. And currently, this is kind of the norm anymore. October live cattle are down 60 cents at 180.95. You see this a lot here lately where they open up a little on the weak side, but they hardly ever finish that way. December is down 47 at 185.17. Now, on the feeders, where they had that strong finish yesterday, we are giving up a little bit of ground. We'll go with September. It's down 62 cents at 253.65. October down 60, now down 55 at 256.47. So it's starting to claw its way back already a little bit. And on lean hogs, they had a big higher close on the nearby contracts yesterday. They're sagging a little bit. October lean hogs down 35. You have December down 30 cents at 73.12. So, Brian, when you look at this market here, especially on the feeder cattle, I mean, you close $3 higher and you give up maybe 50 or 60 cents here this morning. I guess that's a fair trade producers would take, but don't know if you can read much into that here. It seems like the early morning trade is always totally different than what you have after mid-morning.
Yeah, it certainly is. And it could be that case in the cattle market again. If like the grains, kind of just a little setback, turnaround Tuesday type of mentality, I think, out there. As long as you don't take out yesterday's lows in the live cattle or feeder cattle, you're probably going to see some buying interest come into this market once again and maybe push us higher by the closing bell. We take those lows out, and that's where the sell stops are probably sitting. From you look at the cattle slaughter this week, it's probably going to be fairly strong. Hearing some talk that Saturday's kill could be pretty large to make up for Monday when they are closed for the holiday. And they did expand kills on Monday, 122,000 head. So we could be pushing maybe a 630,000 kill week this week, which I think would be very friendly after trading as low as 603,000 head just a couple weeks ago. Packers certainly have some margin there. Even with the cutouts being down last night, they're still looking at over $80 a head profitable margins. So they're going to kill some cattle here in the next several weeks, I think.
I'm glad you brought that up. In fact, we can take a look at the beef cutout values from yesterday afternoon, according to USDA, and they were just a touch weaker, I believe. They backed up a little bit with choice going down 86 cents and selects were down 58 cents. They didn't fall apart, but they just backed up a little bit after recent gains. Well, appreciate the time here, Brian. Good to visit with you again. Thank you very much. Brian Hoops, he is with Midwest Market Solutions in Springfield, Missouri.